This week, Big Four brings you a focused news magazine on Ernst & Young. We cover a report that most Asian oil and gas deals in 2011 are outbound, an analysis that nearly half of the world's growth over the next 3 years from rapid growth markets. Also, Ernst & Young adds 4 advisors to fraud investigation and dispute services practice. The firm finds that clean tech investment remains steady at $4.9 billion, that Australian financial institutions are under FATCA pressure, and Ernst & Young's findings that U.S. IPO confidence returns for 2012. Each week, Big Four covers key news, events, happenings, opinions, and blogs relating to all the Big Four accounting and consulting firms. You can view this video on our website and on Big Four's channel on YouTube. Please contact us at bigfour@bigfour.com or 866-690-5050 for advertising on this video or especially featuring your news. Also, place your job opportunities on the Big Four job board. So let's start with this week's roundup of the top news. Asian countries and Australia showed momentum for outbound investments in their attempt to provide security of energy supplies in lieu of increasing domestic energy demand in 2011. Oilfield services sector transactions continued their momentum in this highly fragmented subsector, although the magnitude of deals was relatively smaller. Selective sovereign wealth funds and private equity remained focused on further building up their service portfolios. However, 1,322 oil and gas transactions were announced in 2011 globally, an increase of more than 5% compared to 1,258 in 2010, proving that this remains one of the most resilient global sectors for mergers and acquisitions. The most recent rapid growth markets forecast RGMF shows those markets will continue to contribute nearly half of the world's growth over the next 3 years. There are several noteworthy benchmarks here, including the fact that rising trade links will continue to support foreign direct investment, FDI, from Asia and Latin America to Africa and other RGMs. In emerging Asia, with rising middle class, will lead the growth for all RGMs, and demand in metal from China and other Asia-Pacific economies will push prices high. Ernst & Young's Fraud Investigation and Dispute Services, FIDS, practice was recently expanded to meet growing demand for and bolster its depth in e-discovery and fact-finding services. Last year, Ernst & Young began expanding its focus on the e-discovery marketplace in the U.S. with the acquisition of Cataphora Legal, a division of Cataphora Incorporated, a leader in the management and interpretation of digital communications. As a result, Cataphora Legal's senior leadership team, including Jonathan Nystrom, Executive Vice President in Washington, D.C., and Richard Orrell, Ph.D. Chief Linguist in San Jose, California, joined Ernst & Young LLP's FIDS practice as an executive director and senior manager, respectively. 17 additional members of the Cataphora Legal team also joined Ernst & Young LLP. And here are the latest jobs from the Big Four job board. See the site for more details. According to an Ernst & Young LLP analysis based on data from Dow Jones VentureSource, the energy-electricity generation segment led clean tech investment in 2011 with $1.5 billion raised through a total of 71 rounds, representing a 5% decrease in dollars invested from 2010. The solar subsegment received the lion's share of capital in Q4 2011, with $284.5 million, accounting for 91% of the sector's total investment of $312.9 million. The top solar deal for this quarter was completed by Styon Corp., a San Jose-based manufacturer of high-efficiency thin-film solar panels, which raised $130 million. The Draft Foreign Account Tax Compliance Act, FATCA, regulations by the U.S. Treasury and IRS will add to the burden of a raft of other regulatory changes for Australian financial institutions. According to Ernst & Young's Oceania Banking and Capital Markets leader, Paul Sivior, financial institutions are left with little choice, even though complying with the proposed regulations will require significant levels of investment in the face of stronger economic headwinds. Sivior said that to minimize the impact of the changes, Australian financial institutions should begin preparing now to ensure they are able to meet the July 2013 compliance date. The end of 3Q boasted a U.S. IPO pipeline full and primed for companies to go public in 4Q. Now, due to recent gains in the stock market, both companies and investors are feeling more confident about IPOs, according to Ernst & Young's U.S. IPO pipeline analysis. In 2011, BCM IPOs were almost non-existent, except for the offerings of Imperial Holdings and private equity-backed Bank United. However, there was a large list of new registrants, who are still on file as of 4Q. These registrants are mainly consumer finance and mortgage finance companies, such as Innova International, NationStar Mortgage, Home Loan Servicing Solutions, and Ally Financial. This has been Melissa with your Big Four Weekly News. I'll see you next time.